Hi guys, it's Enny, aka the Nut Trader, your friendly neighborhood swing trader, back again with another video. And in this video, I'm going to explain to you how to efficiently invest or trade with as little as £100. Let's get straight into the video. So I get a lot of questions from new traders asking how to invest with as little as £50. So I thought I'd make some slides explaining how I'd go about trading or investing with a small bank. Before I start, investing and trading are two different things. I've made a video about it. I'll put the video on the screen. Check this video out if you don't know the difference between trading and investing. So if you want to invest or trade with £50, I'd just say keep saving. It's not enough money to really get any real skin in the game. So I'd say just keep saving up to get a bit more money before you start putting your money in investments or trading. If you want to invest £100, you could buy cheap shares on apps like Freetrade. These challenger trading platforms and investing platforms that offer zero commission allows people that have small banks to be able to invest their money without being hit with high commission rates that normally can eat into the profits of people with small accounts. Of course, I've put Freetrade in this video, but you can use any equivalent app. In America, there's Robinhood, and I know there's a lot of competitors out there that offer the same services. But when it comes to trading, I'd just say keep saving, and I'll explain to you why trading you need to keep saving and £100 won't be enough. Now let's say you got £500. It's a bit more money. Now if you want to invest, you can do the same thing, which is buy cheap shares on Freetrade or an equivalent service, for the same reasons I mentioned before. And if you want to trade, you can trade cheap stocks on IG or an equivalent service. However, you're taking more of a risk relative to your account size. Now I'll go into more detail in the next couple of slides. Time for some quick maths. So assuming you have £500 in your trading account, your spread betting account, and you want to spread bet Vodafone, which at the time of this recording, their share price is £139. So that's the price. The position size you want to take is 4 pips. So that means that for every 1 point movement, you'll make £4. And given that Vodafone is a FTSE 100 stock, the margin requirement is 20%. So based off of these three figures, this is the equation that you need to know that would let you know how much money you need in your account to make this trade. So 139 times 4 times 20% is £122. So what that means is that if you take a position of 4 pips at the price 139 with a 20% margin requirement, you will need a minimum of £122 in your account to make this trade. So in all actuality, you'd be risking 22% of your account, of your £500 account. But in reality, that's not the case, because even though you need £122 to make the trade, if you set guaranteed stop losses or specific stop losses closer to the entry price. Alright guys, bear with me, we're going to do some maths now. So let's say you set a stop loss 10 pips away from your entry price, which would mean that you set it at 129. That means that your risk would be 10 times 4, which is £40. You'd be risking £40 with £500 in your account. So in reality, you'd only really be risking 8% of your account. So what I mean by this is that even if you have £500 in your account, in reality you can mitigate risk and manage your risk by trading small price stocks, managing your position size, and setting really tight stop losses so that you only risk a small percentage of your account. The rule of thumb is to normally risk less than 5% of your account, but it's a necessary evil if you have a smaller bank size, that you might have to risk more than 5%, but you can still manage risk, so you're not risking a ridiculous amount of your account with a single trade. I hope this makes sense. Okay, so now let's say you have £1,000. With £1,000, you have a bit more flexibility. You can buy cheap shares on Freetrade or an equivalent app and really diversify your portfolio. So you want to buy several different shares if you can in stocks, and and maybe make sure there's shares in different sectors so that you can really spread the risk. If one sector's doing bad, then at least your whole portfolio won't be down. And with £1,000, you can trade cheap stocks on IG. Once again, I have to put the disclaimer that you may have to take more risk relative to your account. I put this there because a lot of traders may say that £1,000 may not be enough, but I started with £1,000 and I did alright. You just have to make sure to manage your risk. I might make another video on risk management. So to recap, with £50, just keep saving. Sorry, mate. With £100, if you want to trade, I'd suggest you keep saving. And if you want to invest, you could buy some cheap stocks on free trade. With £500, you could buy cheap stocks on IG, but make sure you manage your risk. That's why I put the warning sign there. And if you want to invest, you can invest by buying cheap stocks on free trade once again. And with £1,000, you can buy cheap stocks on IG, and you can diversify your stock portfolio. Not Trader, signing out.